Hi, my name is Fred Reed. I'm from Oswego County today. Today, we're here at Oswego County Federal Credit Union talking about home mortgages. And to give us a better explanation of what somebody should do if they're looking to buy a home, we're talking to Aimee and Laura and Laura Seeberger. Ladies, thank you for joining us today and taking the time out of your busy work. Tell us, Laura, what do you do here?
I am the mortgage loan originator here at the credit union. I've been here for 14 years.
Okay.
And I'm Vice President of Lending. I've been here 21 years.
21? Well, I guess you guys know what you're talking about
Yes.
then, huh? Let's just dive right into it, okay? So, I mean, if you want to tell people what the best things they should do about getting a home mortgage, we probably start out with financial preparation. Talk about that for somebody who hasn't ever bought a loan or a home before in the past.
So what I recommend is know what your credit is, know what is on your credit, and know what your budget is, which we do help at the credit union here on budgeting. We have a program we have set up where you can meet with me and we can go over your budget to see where you would qualify and what you would be comfortable with.
Let's go back just to the first thing and say, I want to know my credit score, okay? But I'm worried about where I go and look up, who am I going to give my information to make sure I get the proper from the 3 different credit ratings, and how all that works.
Yep. So with the credit union, you can go right on our website. There is a program we have on there that shows you your credit scores. With mortgages, we do take all 3 credit bureaus, and we do take your median score, which would be the middle score between all 3 to qualify you.
So they do have to be a member to be able to use that tool though, correct?
Correct.
Okay. If they're not a member, but they do want to come to you guys, so they have to become a member before they probably want to even talk about getting a home loan?
No, not at all.
They don't have to.
They can actually come to us and we can start it. In order to actually finish and finalize the loan, they have to become a member before we actually do that. But a non-member can come in. We'd be happy to discuss the actual process with them.
So not to say people shouldn't come in here anyways, because they should. If I wanted to go look up my credit score today without being a member, would you suggest a good place to go or a process?
Annualcreditreport.com is a great site to actually go up, look at your credit, and not just look at the score itself, but look at the information on it, because that is the most important part of your credit.
Okay, and what was that website again?
Annualcreditreport.com.
Okay, so, and make sure you're looking at a secure site when you're doing it.
100%. That is a very popular site, and it's free to actually look at the content that's on your credit reports, all 3 of them, once a year.
Good. So let's go on to the next thing, which is probably going to confuse a lot of people. I know it confuses me when I watch the news in the morning, but optimal timing and what market trends and stuff should we think about when we're going to go get our next house, or our first one for that matter?
Mm-hmm.
Absolutely. So we tell you, yes, you can look at the rate, but not to be different just on that rate. When rates are high, typically houses are lower. When rates are lower, typically houses are higher to purchase. So anytime is the best time. It just depends what's good for you and your budget at that time.
And what rate are you, tell me what you mean by what rate you're talking about, because I hear rates all day long.
So it'd be the annual percentage rate on a mortgage is what you would want to look at, but you also want to look at how much the house is worth and how much the house is selling for.
Okay, so they could probably see the rate right off of your website, or
Yep.
Is there any other locations they could find out what the current national rates are set at?
So you can always look at the prime rate online, or you can look at our rates directly.
Yep. And our rates typically fall below prime.
Okay, so with that being said, I want to go buy a house, okay?
Mhm.
I don't have a house in mind yet.
Yep.
I mean, I've been told, hey, you got to get pre-approved.
Mm-hmm.
Yep.
Can you kind of walk me through that and how my credit score and or savings and everything else kind of rolls into how that works for me?
Absolutely. So what will happen is you'll apply for a pre-approval, kind of get where your budget would land. If you don't know, we will help you and work on that to figure out where exactly you should be looking, figure-wise, for purchasing a home. And then we'll run your credit to see if your credit is at the spot for any type of mortgage program. And then we'll go from there, what you need, and what you can go look for.
So would you say, okay, so, hey, I come down, everything, go, okay, hey, you can buy a $250,000 house. Is that, or do I have to come in and say how much I want?
Nope, you don't have to come in and say what you want. You can if you already know, but most people don't actually know what they want.
Because we don't know what house we're buying yet.
Correct.
We're gonna
Correct.
search, yeah.
But we want to make sure you're qualified for the house you're looking for, so you're not looking over your means or under your means by any means.
Okay, so do you, some of the things you were talking about, guidance and budgeting and stuff like that, I mean, I've gone to a bank before and they tell me I can borrow all this money and everything, and then I kind of look at what it's gonna cost me, whether it be interest rates or even just the monthly price that or the monthly bill that I'm gonna be paying for it is out of what I wanna pay. Do you walk that through people? Because I know people who are house poor, meaning they bought houses well beyond their means, even though they qualified for something.
Absolutely. So we have financial counseling where we go through your budget and can show you what you really can afford. And then we want to make sure you're comfortable with what you think you are wanting to spend also.
Okay. What you qualify might actually not be what you should be actually purchasing.
Correct.
Yeah.
So I get it pre-approved and everything like that. What's the next thing that we're going to sit down with you and do as a home buyer?
So after you're pre-approved, you're going to go out and start looking for homes, and then you are going to, if you find a home, you get me a purchase contract and we'll start working on the deal.
Okay, so I'm buying it now. I'm getting my house and everything. And we're going to start talking about something that a lot of people, especially first home buyers, might not understand, which is the big old closing costs.
Yep.
And where they come from, and also paying them off or putting them in a loan.
Okay. Yep. So closing fees, we do give you an estimate with your pre-approval letter to show you exactly what they're going to be. It's going to include your appraisal, your title search. There's some fees on there that we incur for pulling your credit. It will label exactly what you have to pay. It will also help you tell you what kind of down payment you need, depending on the mortgage program that we can put you into.
And those, when people see that though, the optimum thing is to pay those pay those up front. Don't add them into your loan. And also, I believe when I did it the first time, we had a lawyer from the bank with us. Is that
Correct.
part
Yep.
of that you, because I know a lot of people don't understand that you should have a lawyer with you when you're buying a house.
Absolutely. So at closing, you will have the attorney from the credit union with you. Also, the seller's attorney will be there. And if you are purchasing from like a friend or family member, or the seller doesn't think they need an attorney, they will have to have an attorney. So there will be multiple attorneys at closing.
Keeps everything above board.
100%.
Absolutely.
So what else do you want to tell me about? And specifically, why is it the best reason to come to Oswego County Federal Credit Union and talk to you two ladies about this?
I think the biggest thing is that we actually individualize it, right? So a member or a potential member comes in, they're thinking about buying the house. We're actually going to sit down, talk to them, look at their credit, give them some advice. So not always can we say yes, right? Maybe they're a little credit challenged or they don't have money saved. What we do is actually work with them to give them the education that they need so that we can say yes in the future. Right? So maybe you have some collections. Maybe you don't have enough credit yet. We have great credit building programs, and kind of just really give you what you need to get to that point of owning your home. That's a dream, right? That's a dream, to own your own home.
Sure. Yeah.
We work with them, work about how to actually save beforehand. When you're a first-time home buyer, you might not have the means, right? Sometimes there's grant programs that we can help with some of the closing costs. So definitely want to look for that. But we actually individualize it. We're just not going to say, nope, you can't get this home and send you on your way.
Right.
We're going to work with you to get you to where we can say yes. So that's definitely something that here at the credit union we do much different than some other organizations.
Two things I want to ask. One is, how does your credit score impact purchasing a home? Does it affect your interest rate? Does it affect how much a bank or you guys might ask for a down payment? How and what does it affect on
On the actual,
purchase
An
or
actual
the
purchase,
loan?
yeah. So there's different programs, mortgage programs that we can get into depending on your credit. So the interest rates are a little different. But we'll also guide you what your credit is and why we chose this program for you, this mortgage program for you, or why we couldn't choose one over the other.
yeah, and a lot of times we put you in a program that's specific for here, where other institutions might not be able to get you approved, but we might be able to get you approved.
Got it.
So we hold some actual mortgages that might be a little risky, or maybe the credit score is just a little off, right? We'll actually hold some of those and get you into your home.
So probably most people coming to buy, especially a first-time homeowner, or wanting to be a first-time homeowner, let me say that again. People who want to become a first-time homeowner, let's just say they're renting a place. Does it help? Are there places that supply credit ratings based on people's rental payment history?
Most of the time they don't. We, however, do
We
look
do.
at that.
Okay.
We
So
look
you-
at their rental history as far as making on-time payments, what is their employment, all of that type of stuff.
Okay, so it's all part of it. And the other thing is have you ever, and this might not be, we might have cut this part out, but stupid question, have you worked with people who were in a house renting to own it? And then, so at some point or another, it's going to turn over into a purchase of the house, one way or another.
That's
You want me to cut that out, or is that?
No, that's
okay.
definitely something, because a lot of times people get into those situations where maybe they don't qualify for a mortgage right off the bat. So they enter into agreement with the homeowner to actually rent it and eventually buy that out. And a lot of times there's a time limit. Within this amount of time, you actually have to do that. It's just like a purchase in reality, because you don't own it yet. The deed isn't necessarily in your name.
Right.
So you can come to us to actually purchase that home and get into that home from the rental situation into the ownership situation.
And does that affect you, the person, because obviously they've had a good reputation, whoever they're renting the home from, if they're ready to turn over and buy it, that probably helps in the long run that they've done some establishment even if they started out with bad credit, which is probably why they got into a rent-to-own situation.
100%, yeah. Yeah.
Okay. Anything else you'd like to add to this, or?
There's a couple things that I would recommend not doing if you're looking to purchase a home. Don't try to change jobs unless it's in the same career path. And don't add any new debt to your credit.
Yeah, so you want to stop borrowing new things before you actually apply. And start saving. Start putting aside some of your paychecks if you can to get that down payment, or have that slush fund for what ifs, What
Yes.
happens if something happens to the roof, You definitely want to have that money kind of set aside for those issues as they
Yeah,
arise.
you can't call the landlord when the
Yes.
when the water heater goes,
Yeah.
or whatever. I mean,
For sure.
houses, they're a big responsibility. They're a great purchase, but they're a big responsibility. You do want to maintain
Yeah.
it. So, plus, like you said, I mean, a decent down payment helps everything,
Yep.
including what mortgage payment you might be making in the end.
And a lot of times you might think, well, it's going to be really expensive. You might be paying the same payment you're paying right now for rent to actually own the home.
Correct.
Yep.
And it won't change as much as your rent does. The other thing that I have heard from people, and I also had to explain to my wife, was your mortgage payment isn't necessarily just your mortgage if you're going to escrow yearly taxes and insurance. Which is, do you talk to people about that, paying your yearly
Absolutely.
taxes throughout the year separate from the mortgage?
We actually roll them into our mortgage.
Typically we have them in escrow just because a lot of people look for that. They want to just make one payment and be done with it and not have to worry about it.
Don't want to have to worry about it.
Absolutely.
And what an escrow is, if people don't know, is kind of like a separate account where money goes in to take care of paying your tax bills. Here you have the city, the county, the school,
Cool, yeah.
and it's put right into your payments, so you don't have to worry about saving that money on the side to make those payments.
Right.
It's huge.
You
Very,
get your
very
budget
helpful.
easier. I mean, that's why we did it. It's
Absolutely.
easier to
Lot
budget
easier.
that way than coming up with $3,000 or $4,000
Yep.
once a year. But pay attention to what's going on in the area, because your mortgage payment may go up because of that.
Because of taxes.
Not
or
that your mortgage
insurance.
not that your mortgage is actually going up, but the tax portion of it is going up, and that's a non-interest account.
Mhm.
So people can't come back and say how much interest you're making.
Yeah, exactly,
Right,
exactly,
right.
yeah.
Okay, anything else? Did I leave out anything, or?
In 2025, we could possibly have some grant money available, so definitely reach out to us. Let us know you're interested, and we'll take a look.
Thank you, ladies. I hope you guys have a great afternoon. It's a beautiful day, and hopefully.